Hi guys, today's video I'm going to break down the yesterday's trade that happened on the last day of July. So the trade was on the USD CHF. It was a short trade at the start of the New York session, and analysis obviously was done in the London session. So guys, let me break down this for you and give you the details of what I was seeing for price to do. So we are currently on H1 time frame, and as you can see on the left side we swept the liquidity to the upside, as you can see. So all those short-term highs were taken out with this significant move to the upside, then small structure was created, and then we had the last push higher to take out everything here on the left. So everything here on the left was taken out, which means that liquidity was taken. Now, in a sense of the downside movement and the confluence is what we have. So obviously, with this movement to the upside, price created imbalance, right? So if I just show you where the imbalance is, we have one from this week to this week in this candle, and then we have the second one we have from this week all the way up. So this is imbalanced and possible targets, right? But this is kind of for the swing trading, and since I'm day trading, I'm only looking for trades inside of the each day. Then additional confluence, we have equal lows, right? So we have liquidity to the downside, so we have equal lows, which obviously is the target. Now let me switch to the 15 minutes. So complete analysis was done on the 15-minute time frame, and let me show you what we have. So the first thing, obviously, we have equal lows, which I'm going to mark up right now. So we have liquidity to the downside, and as you can see, this push, so this last movement to the upside, was not a break of structure because the next movement to the downside, so impulse movement to the downside, kind of broke the structure, right? So it's not the BOS to the upside, but it's in fact liquidity grab and market sweep on the upside. So we can mark that as a sweep. So this is the sweep, and this last up candle prior to sell-off is order block, right? So this is the level I will use for possible short entry. So I plot the level on 87.27. It was 27 sharp, so let me, like this, obviously. Now I'm going to apply indicator for Asian session and previous daily high and low, right? So this is super important. We have to know in which side liquidity is going to be taken, so we know that, okay, if liquidity is going to take into the upside, then we are going for the downside. It's always the opposite direction, right? Now, as you can see, this bottom line is previous daily low, which is in fact on the equal low, right? So cross confluence. Now we have this up candle prior to sell-off, which acts as an order block. Inside of this, if I delete this, let me just, where is it? Okay. Inside of this, we have the imbalance. Okay. So the imbalance, as you can see, is from this week all the way to this. So we have an imbalance as well, like this. So this is additional confluence for price to actually come to this level, right? And then reject and falls down. Now, in a sense of smart money trap, right? Because, you know, SMC concepts are from each person is different, right? But most SMC traders are losing trades because of these single mistakes they are making, in a sense of maybe a mindset basically, or lack of knowledge or experiences. So smart money trap is basically where the inducement happens, so where all of the SMC traders that are impatient, right, goes in because they have a FOMO effect and think, okay, I'm going to miss the trade, but in fact we are just the liquidity, right? Simple as that. So in this case we have SM inducement there. So price did not reach the order block yet, did not cover the imbalance yet. So this is unmitigated at the moment. It's unmitigated, so it's still valid for us to go into the shorts. Now, where our targets are going to be. So the first thing, obviously, we're gonna look for target below the Asian low, because we are anticipating that Asian high must be taken out first, imbalance covered and order block rejected, and this is basically our entry based off 15-minute time frame. And why on 15-minute time frame? Because we already have the sweep of liquidity on the left side on this time frame, so it's no need for me to go lower, right? Okay, so we are anticipating this movement up and down. So the targets obviously are going to be below the Asian low, and it can be even lower. We can target the previous daily low at the end of the day. Okay, but me personally, I'm targeting only 1 to 3 risk reward ratio, because being consistent with this, it's enough, right? Okay, so I'm going to mark up the target. I'm going to mark up this low as a target. Just let me just get rid of this indicator. Oh, where's the Asian low? So Asian low is this, and this is the target as well. Okay, so we have two targets like this. Okay, we have two targets. Now let me play for let me plot the short position. So my entry was there, and I had 11 pips of stop loss, 11 pips like this, and it was 1 to 3 risk reward ratio for me personally. It was below the Asian low like that. So this was my trade yesterday, and obviously price pushed even lower all the way to this target that is previous daily low. So if you are having bigger risk reward ratios as a target in your trading plan, then obviously you can use that, but my trading plan says 1 to 3 maximum, okay, because being consistent is the best. But let me just drive this down. Okay, so in the sense of those targets, we have to know, we have to find the reasons for price to go from A to B, right? Because the price is driven by liquidity imbalances, fair value gaps, how it doesn't matter how you want to call it, it's at the end of the day the same thing. So in the sense of this, at the very bottom we have the order block that swept the left side liquidity. As you can see, it swept the previous low. Okay, so this is swept, liquidity was taken and created equal low, which is the thing I don't like. Okay, but still this is the order block, and inside of this we have additional imbalance, right? So this is why this can be a target. So we can target as well this order block and possibly go long, but I would use this as the 15-minute POI. So which means that when the price comes to this level, I want to see it rejected. Okay, let me just write this down. I want to see it rejected. I want to see some confidence that price is not going to go below it. If it goes, then fine, because I know, okay, the previous daily low is taken out and liquidity as well is neutralized. So it's no more reason for price to go even lower in this case, right? So I want to see, structure being created, BOS to the upside, came back down, and then continuation all the way up. But anyway, so this is the indicator, the ICT kill zones script that I have for London, New York session, London close. So I know in which session I am. Basically, I know because of the timing, but you know what I mean, right? It helps. Okay, so let's play. Let's hit a play. Okay. We have BOS, which is okay. Now liquidity to the downside. So Asian low is taken out, right? Fine. Why? Because now I know that price will go for the Asian high, because liquidity was first taken to the downside. So it does have reasons to go higher now, right? And this lows our target. So we just, let's say adapt to the current situation and just move the target. Everything is fine so far. Okay, we are in the New York session. As you can see, it's a New York Open. So New York Open, boom, escalated up, enter the trade. So the trade is now triggered. We have We don't have rejection yet, so next candle definitely will. So we have rejection of order block on the left side. We covered the imbalance. Now, where is our 1 to 3 target? Let me just see, because it was my TP was fixed to 1 to 3. I'm going to move that and gonna apply this line, so I know this is 1 to 3 risk reward ratio. 1 to 3 like this, okay, and the target obviously all the way down was there, right, originally. Now, in the sense of where are possible, let's say, targets to the downside, so we have this imbalance to be covered, so this is another reason. We have this low to be taken out, you know, we have this low to be taken out as well, because this low took out the Asian low, right? So we have this to be taken. So if I can just mark that up as well if you want to. So we have liquidity grab to the downside. We didn't have any BOS, so it's just liquidity grab. Okay, let's continue. So far we currently are moving, I think 2%, something like this. So this was the time when I placed break even. Usually I place my break even when price is moving in 1% in the profit. But then you can have easily, you know, break even hit and then collapse, etc. So you can, the best kind of thing is when price breaks the lows or highs, like previous lows and highs. So if this was the previous short-term low, as you can see, this is now the time to break to place break even. So we are kind of risk-free. Okay, so placing break even like this, price is collapsing in the New York session, as you can see. Target was hit to the T. Okay, so my 1 to 3 risk reward ratios of 3% were hit to the T in a span of let's say we have this is New York Open, it's 2 p.m. for me, and entry was hit, I mean TP was hit at 3:45, so it's 1 hour and 45 minutes for 3%, which I can't complain, right? It's beautiful. So this setup was basically a textbook. It was definitely a textbook. Everything is fine, confluences are there, everything is like perfect, so it's a plus setup. So eventually, as you can see, eventually price did reach the 15-minute POI, as you can see, to the T, right? So 15-minute POI is currently rejected. Now this means if the structure is going to be created there, then we can go long, but I didn't, obviously, right? Because it was late in the day and I had my percentages in the pocket on the last day of July and it was Monday. Okay, as you can see. So yeah, at the end of the day, boom. So the trade was successful. It was a textbook. Now remember that you only want to trade the setups that have, you know, a lot of confluences. You want to be patient, because I think I took 6 trades, maybe 5, something like this. I don't know for sure. This month it was, and I'm 8% plus. So yeah, you don't need much to do much. So it is what it is, right? Make sure you always use risk management, 0.5 or 1% per trade. You don't need to be active whole day, all day. I mean, every day, you know. Most of the time I'm just sitting on my ass doing some shit and not even looking at the charts, obviously. So you know, don't be this guy to be, okay, I need to be online at 7 a.m. every day. No, you don't need to be. In the forex, the more you do other stuff and be, you know, at the charts when you have to be, obviously, the better, right? Just don't be pressured, don't be, you know, because you're not going to miss anything. Market is always going to be there, trades are always going to be there, so you don't need to worry about it. Okay, yeah, so this is everything about the market breakdown. I hope you like it. If you're gonna have any questions, feel free to leave a comment under the video or even message me on social medias. And until the new video, take care and have a good week. Bye bye.